Wall Street closes higher in a volatile session. The Nasdaq and the S&P 500 close at record levels, even as Fed Chair Jerome Powell suggests that despite progress on inflation, the Fed is not yet ready to cut interest rates. Asian markets trade largely higher following a strong handover from Wall Street. The GIFT Nifty is also suggesting a positive start for the Indian markets. Crude prices rise but give up some gains, with Brent trading around $86 a barrel. Gold prices remain subdued as US yields rise to the highest level in a month. HDFC Bank's foreign shareholding falls to under 55%, creating room for an increase in the MSCI weightage, potentially opening the stock up to inflows of $3 to $4 billion. And over 100 people are dead and several injured after a stampede in Uttar Pradesh's Hathras district. Majority of those killed are women and children. A religious preacher and his wife were addressing a large gathering when the stampede ensued. The state government has announced an ex gratia of 2 lakh rupees for the deceased. Good morning. Midweek has arrived and we are back with another edition of Power Breakfast on CNBC-TV18 in the Mumbai News Centre. I am Hormas Fatakia. Let's first take a look at how the Asian markets have opened this morning, and it's been a largely positive start across the Asia Pacific as well, considering the handover we had from Wall Street. The Hang Seng extending gains from yesterday was an outperformer yesterday as well. Now it's up 0.6% as we speak. The Taiwanese index, which was trading lower yesterday, recovered some of the losses, now trading with gains of 0.7%. The Japanese indices are also doing well for themselves. The Nikkei is up close to 1% and extending gains now above the mark of 40,000 is the Nikkei. So good going across the Asia Pacific. And pull up the GIFT Nifty as well, and that is also suggesting a gap up start for our own markets today, most likely to be about HDFC Bank, but the Nifty implied open suggesting a 120 point uptick at the start of the trading session here in India. But over to the US markets, where Wall Street ended Tuesday's trading session higher. The Dow closed with gains of 160 points, while the S&P 500 closed above the 5,500 level for the first time. The tech-heavy index, which is the Nasdaq, also ended nearly 150 points in the green. CNBC's Kate Rogers gets us a wrap of all the action on Wall Street.
U.S. markets ended the day higher after Federal Reserve Chair Jerome Powell highlighted declining inflation in the U.S., but stopped short of predicting rate cuts this year. The Dow up 162 points, the S&P 500 higher 34 points, and the tech-heavy Nasdaq up 149 points. The Food and Drug Administration approved Eli Lilly's new Alzheimer's drug today. The pharmaceutical company said the drug, which is being sold under the name Kisunla, has been shown to modestly slow a decline in memory and thinking abilities in clinical trials. A one-year course of therapy will cost $32,000. The FDA granted full approval to a similar drug last summer. And as we enter the hottest time of the year, President Biden took steps today to issue the country's first ever rule on protecting American workers from extreme heat. The proposal calls for employers to take several steps to manage the risks to an estimated 36 million workers. They include requiring rest breaks, shade, and water, as well as training to recognize heat-related illness. That's what's happening here in the U.S. Back to you in Mumbai.
Now, all eyes were on Jerome Powell yesterday, and the Fed chair stated that the U.S. central bank requires more data before reducing interest rates to confirm the recent lower inflation print is accurate. Now, speaking at the Central Banking Forum in Portugal, he reiterated that the central bank was not quite ready to cut interest rates. Listen to what he had to say.
We've made quite a bit of progress in bringing inflation back down to our target. While the labor market has remained strong and growth has continued, we want that process to continue. I think the last reading and the one before it in inflation, the one before it to a lesser extent, do suggest that we are getting back on a disinflationary path. We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy. That's what we've said. And what we'd like to see is more data like what we've been seeing recently. We'd also like to see the labor market remain strong. We've said that if we saw the labor market unexpectedly weakening, that is also something that could call for a reaction. I'm not going to be landing on any specific dates here today. Let me also say that we're well aware that if we go too soon, that we could undo the good work we've done in bringing down inflation. And if we go too late, we could unnecessarily undermine the recession, the recovery, and the expansion. And so we're aware that we have two-sided risks now, more so than we did a year ago. That's a big change. I'd say risks are coming much more into balance now.
Jerome Powell there, and the question still remains, when will the Fed finally bite the bullet? Let us also now listen into a whole host of market experts and economists reacting to the Fed chair's comments at the forum.
I found myself very much in agreement with his sentiment that if you look over the last year, where we got inflation coming well down, and I think we are restrictive. The Fed funds rate in real terms, interest rate minus inflation, is as high as it's been in many decades. And as inflation comes down, that gets tighter. We're real tightening. And I think you should tighten by choice, not by default. You know, so this argument that if we get more months of inflation readings like what we've seen in the last couple of months, or like we saw in the last 7 months of the year last year, that would give us a lot more confidence.
Jay Powell wanted to reiterate that they're in wait-and-see mode. They want more confidence on inflation outcomes in particular before they move ahead with the easing program, and I think they mostly accomplished that. The labor market remains relatively strong. One statistic I've been looking at, which no one looks at, is the year-over-year non-farm payroll growth. So a year ago, if we were sitting here, that number would have been 2.5% growth over the from the previous year. Right now, it's 1.75%. It's basically a declining, sloping line if you look at the picture. So, you know, that kind of gives you the sense that there is slowdown, but the chair does a great job in saying that that's not really slowdown, that's normalizing the jobs market.
And let us now get you the final update on our global market wrap this morning. European markets closed lower after the Eurozone core inflation held steady. The British FTSE slipped around 0.6%, while the German DAX fell 0.7%, and the French CAC closed 0.3% lower. The Stock 600 also resumed last week's decline, provisionally closing around 0.4% lower. And in some macro cues, headline inflation in the euro area dipped to 2.5% in June, but figures for the core and services inflation remain stubbornly high. And that's all we have on the global market action this morning. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news today. First up, Sudarshan joins us to get all the market cues we need to watch out for. Sudarshan, good morning. I guess all the overnight cues won't really matter today considering HDFC Bank.
That's so true. Morning, Horma. So market on Tuesday saw profit booking at record levels, but Nifty's intraday low has been higher than previous day, and for the first time, Nifty managed to hold the levels above 24,000 even in the intraday move. And in intraday swings, we saw a major fall, especially in banking names, and that led to Nifty Bank falling more than 1% or say 660 points from day's high. And the drags came majorly from names like ICICI Bank, SBI, Kotak, and IndusInd Bank. And if we talk about the support for market, once again, it was IT, and there was one name from banking space too. It was HDFC Bank. So the question is, why was HDFC Bank higher despite other banks seeing a major fall? The answer is investors were waiting for the June shareholding, which came yesterday evening, and it indicates that FI holding in the company has slipped below 55%, which has created a headroom of more than 25% and may lead to flows in the range of $3 to $4 billion in the company. Now, even in today's session, the stock is expected to be a major support for both Nifty and Nifty Bank. Now, talking about the institutional flows, we saw continued selling by FIs, while DIIs have bought for third straight day. And from global markets too, cues are looking stable for today. On Tuesday, we saw US market closing at day's high after Fed chairman's statement saying he is satisfied with the progress made on inflation. Even US 10-year yield too cooled off to 4.43%, but crude remains elevated but steady. Brent is around $87 per barrel. And tracking all these cues, GIFT Nifty is indicating start once again at a record high. Lastly, in the cues to watch, we have US initial jobless claims. Estimates are we might see an addition of 235,000. And lastly, FOMC meeting minutes is expected at 11:30 p.m. tonight.
Plenty of global cues to watch out for as well. Sudarshan, thanks a lot for that. Now over to Vamakshi, who would list out the stocks that you need to watch out for in today's session. Vamakshi, good morning.
Well, good morning, Hormaz. Let me first start off with HDFC Bank. FII holding has fallen below 55%, and this in turn paves way for possible increase in MSCI weight, and this in turn leads to could lead to fresh inflows. Nuvama expects $3.2 to $4 billion worth of inflows to come through for HDFC Bank. Yes Bank is the next stock that we will be watching out for. Q1 update coming in from them. Deposits saw an uptick of 21% YOY, but were down nearly 0.5% on a sequential basis. Advances were up nearly 15% and up only 1% on a sequential basis. M&M Finance reported a rather weak operational update for the first quarter. Disbursements for the month of June were up 2.8% YOY and down nearly 1% on a month-on-month basis. Asset quality also deteriorated, with stage 3 at around 3.6% as compared to 3.4% sequentially, and stage 2 at around 6.1% as compared to 5% sequentially. Avenue Supermarts is the next counter we will be watching out for, and that is because the standalone revenue in the first quarter was up 18% YOY, and the total number of stores as of June 30th now stand at 371. Mall reported an uptick of almost 14.5% in its sales, and production was up by nearly 8%. Hindustan Zinc reported a 2% jump in mined metal production, 1% jump in saleable metal production, 1% higher in refined zinc production, and 2% higher in refined lead production. IEX in its business update for the month of June said that total electricity volume was up nearly 25% YOY. Green market volume also improved significantly. Day ahead market volume was up nearly 18%, and real-time electricity market volume was up 20%. Order wins galore for KEC International. They've received new orders worth 1,000 odd crores in the T&D business. Badi Energies have bagged an order to supply nearly 900 megawatt of modules for Serentica Renewables in Rajasthan, and RVNL has bagged an order worth 133 crores from Central Railway. And lastly, we will be focusing on Zee Entertainment. Anurag Bedi has resigned as the Chief Business Officer of Zee Music, and his role will be now taken over by Mr. Umesh Bansal, who is currently heading the movies business of the company.
Well, another top-level exit at Zee Entertainment. We'll keep an eye out of that. Vamakshi, thanks a lot for those updates. And lastly, Nigel joins in with cues from the F&O space. Nigel, good morning. We took a bit of a break yesterday, but I guess the upside is likely to resume today.
Well, that's right. HDFC Bank, that's going to be the big focal point in today's trading session. We start off in the green just in the back of that big heavyweight because of the MSCI rejig, with the street will start pricing in. But just to give you a couple of data points, well, the street is positioned for this event actually. And they're positioned very, very well. In fact, if you look at it from the Valentine's Day low, well, the stock is up close to around 25%. And in today's trading session, which is the 3rd of July 2024, we're all set to hit a fresh 52-week high. And last year, this is exactly at the same time last year, we hit a 52-week high. The price is up for you on the screen at 1,758 rupees odd. What about the FI positioning? Well, they continue to remain net long, 87%, 83% of the positions on the long side, 17% on the short side. Even if you look at it in absolute terms, the FIs, they are net long, while the clients, they are on the short side. So both of them in different directions on index futures. Though on stock futures, both of them on the same side, because both of them are net long, both are the FIs as well as the clients. And if you look at it, the FIs in the last few sessions, well, the net long exposure to the stock futures have come down. From around 6.8 lakh odd, it's come down to around 6 lakh odd, but both of them are on the long side. Look at the options data. You have the two goalposts, so to call it. 24,200 call was active, 23,800 put was active. So the levels come up for you on the screen. Though we're going to see a gap up, that 24,300, 24,350, that's a bit of a resistance zone in the near term. And the level we went to a few sessions ago, 23,800, that's important on the downside. Though in the near term, that 24,000 odd mark is something we look at. The Nifty Bank. It's going to get that booster shot from HDFC Bank. Can it make a fresh all-time high? That's going to be important. My gut is, if HDFC Bank opens up 4-5% odd, maybe much of this play is already in the price, and that it'll be rather tricky to get in if we see such a big gap up. Back to you.
Returning gains with love to investors is HDFC Bank. An interesting observation from Nigel. Thanks a lot for that. The time for a short break here on Power Breakfast. Up next, HDFC Bank's FI holdings decline, potentially opening up room for more inflows. We get you more details after this short break on the other side. Stay tuned. Welcome back to Power Breakfast, and continuing our coverage on HDFC Bank. The latest shareholding data indicates that foreign shareholding has fallen, which may open it up to more inflows from foreign investors. Abhishek is joining in to tell us more. Abhishek, good morning.
Good morning, Homa. So to begin with, HDFC Bank had released its, June 2024 shareholding, wherein they have seen FPI holdings or FIO holdings to be below the 55%, which is a key indicator for MSCI inflow. HDFC Bank is in focus. June shareholding indicates that their FI shareholding is at 54.8%. Now, FI holding has fallen below 55.5%, which is the key level for MSCI inflow into the stock. So HDFC Bank can see an inflow of anywhere between $3 billion to $4 billion. Anywhere in that range, they can see an inflow. So FI headroom has slipped below the 55%, which creates an overall headroom of 25% for FI holdings to increase. So foreign investment ceiling in HDFC Bank is at 74%, which is a key alert that I would want to give to our viewers. Back to you.
Abhishek, thanks a lot for that update. We'll keep an eye out on the moves in HDFC Bank. But from one bank to another, after being named by Hindenburg, Kotak Mahindra International distances itself from the issue, saying that Hindenburg has never been a client of the firm. Now, this comes after Hindenburg received a show cause notice from SEBI in the Adani Group case. Now, Ritu Singh has details of Kotak Bank's clarification to the exchanges. Ritu, over to you.
Well, Kotak Mahindra finds itself dragged in the middle of this Hindenburg-Adani Group storm. But in a statement to the exchanges last night, Kotak Mahindra distanced itself further from the issue, but did acknowledge that K India Opportunities Fund Limited, which is managed by Kotak Mahindra International Limited or KMIL, did receive a show cause notice dated June 26th from SEBI on the 2nd of July. They clarified that the transactions in respect of which the allegations are being made were made by the fund on the advice and for the benefit of its investor Kingdon, and KMIL was informed by Kingdon that the transactions were made on a principal basis, that is for themselves. Kotak also said that Kingdon never disclosed that they had any relationship with Hindenburg, nor that they were acting on the basis of any price-sensitive information. In fact, they said all of the action was only on the basis of purely public information. They further said neither the fund nor KMIL were aware that Kingdon entities had any association with Hindenburg and had no prior knowledge of the publication of the Hindenburg report either. So Kotak denying any allegations of acting in collusion in any manner with Kingdon or with Hindenburg, and also adding that they're extending their full cooperation with SEBI in their investigation.
Ritu, thanks a lot for that update. Now, moving on, the finance minister is expected to table the union budget for the fiscal year later this month. The auto industry is batting for concessions for hybrid, CNG and flex fuel vehicles in the budget document. It also expects that the government will announce more incentives to ensure mass adoption of electric vehicles. However, the industry is equally vigilant that the government needs to maintain a fine balance between EV affordability and fiscal discipline. Abhimanyu Sharma has this story.
Budget 2024 is here, and India's automobile industry is looking for clarity on the third phase of the FAME scheme. While two-wheeler makers are getting ready to work with reduced subsidies, makers of hybrid, CNG and flex fuel vehicles are hoping for some fiscal concessions in order to promote these technologies.
The need to support new technology which is more expensive and therefore needs to be brought more be made for more affordable for consumers. The other one, of course, is the need to maintain fiscal discipline. It's not only India, but many other economies which are grappling with this issue. Going ahead, I think the industry does recognize that subsidies cannot carry on forever. And I think the government also is very cognizant of the fact that the momentum that's been gained so far needs to be maintained. So I believe a balanced approach will emerge, taking all stakeholders into consideration.
As it pertains to electric vehicle mobility, we would request that the government continue the type of progressive policies that it has implemented over the last 5 years. I don't think subsidies are there forever, but until the critical mass is reached and it becomes almost irreversible so that the upfront cost of ownership can be mitigated, they should be continued. But they are not here forever. and the industry very well recognizes that.
There is a continuing demand from the auto industry for demand-side incentives and PLI schemes to make sure that EVs achieve a critical mass. There is also a focus on fiscal discipline as subsidies will not last forever. In Delhi with video journalist Balbir Singh, this is Abhimanyu Sharma for CNBC-TV18.
Abhimanyu Sharma there on the auto industry's hopes for the union budget. Now, time for a short break here on Power Breakfast. Up next, we get you cues from the commodity space. Stay tuned. Back on the other side. Welcome back, and as promised, Manisha Gupta is now joining in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, I'm looking at the metal prices which have seen some support come in, and that is because, and that is even as the treasury yields are at a 1-month high, but we have seen the US dollar decline. So the gold prices have seen some support coming in because the US jobs opening in May has seen a rise, and the US Powell speech shows a higher possibility of easing in the month of September. If you look at metal prices also, it's a strong support for iron ore. Copper has come back above 4.5 and $9,600 a ton on LME prices. The Chinese manufacturing data has come in on the positive side. Japan numbers also seem fine, and that really seems to be supportive for the markets right now. If you look at the crude oil prices, we're looking at continuing support for this one as well. There is decline in U.S. inventories. The Hurricane Beryl has made a landfall in one of the Grenada islands, but it will weaken as it enters Gulf of Mexico. But remember, this is one of the initial hurricanes, and there are 24 named storms coming up in this Atlantic season. So that's a premium that the markets will continue to hold on to. And then apart from that, the U.S. summer travel season is estimated to see an increase in travel. The car travel also is expected to go up by 5% in these next 2 to 3 months. So you are looking at stronger demand coming in from U.S. as well. So everywhere that you look, the month of July has started on a positive note, and today is yet another day when Asia is trading in positive.
Manisha, thanks a lot for that update there from the commodity space. But moving on, over 100 people have been killed after a stampede broke out at a religious event in a village in Uttar Pradesh's Hathras district. As per eyewitnesses, a religious preacher and his wife were addressing a gathering comprising mostly women and children at a tent at the Ratibhanpur village located at the border of Etah and Hathras districts. The stampede broke out when the event came to an end and people started rushing towards the exit. Chief Minister Yogi Adityanath has set up a committee and ordered an investigation into the incident, while the state government will also give an ex gratia of 2 lakh rupees to the deceased. District Magistrate Ashish Kumar has assured that the administration is investigating the matter further and expediting relief efforts. And Prime Minister Narendra Modi also addressed the issue in Parliament. Let's listen into what he said.
यूपी के हाथरस में जो भगदड़ हुई उसमें अनेकों लोगों की दुखद मृत्यु होने की जानकारी आ रही है। जिन लोगों की इस हादसे में जान गई है, मैं उनके प्रति अपनी संवेदना व्यक्त करता हूं। मैं सभी घायलों के जल्द से जल्द ठीक होने की कामना करता हूं। राज्य सरकार की देखरेख में प्रशासन राहत और बचाव कार्य में जुटा हुआ है।
And that's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.